As we slip into yet another day of apparent consolidation, BitMex has gone down, sharding and staking launch on the Harmony chain. I buy stock of a Chinese mining giant, and we discuss the future of Bitcoin's price action today live on Breaking Bitcoin. All right. Welcome back to Breaking Bitcoin. We are live every single day, Monday through Friday, that is, at 12 p.m. Central Standard Time. This is your daily source for everything cryptocurrency markets and personal finance. I'm your host, Justin Wise, lead analyst at CrackingCrypotcurrency.com. Hopefully you guys are doing fantastic wherever you happen to be tuning in from, whether you're watching us on YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you guys are new to the channel, make sure to subscribe, hit the bell icon. That's the only way you can get notified when we go live. Like goal for today's live stream is 50 likes. Let's get those likes coming in, guys. Let us know you support the content. Before we begin, of course, if you're tired of watching price from the sidelines, trading with your gut, or being disappointed by the latest 100x calls from crypto Twitter, join our community of traders and begin building your own objective data-driven strategy. You can take advantage of our community and one-on-one mentoring, our premium indicator suite, which we've designed to help take the guesswork out of trading, our verified trading signals, and much more, including our educational content. You can sign up or find more information at premium.crackingcryptocurrency.com or click the link in the description down below, premium.crackingcryptocurrency.com. So much to talk about today, guys. Hopefully you guys are doing well. Before we begin, Paul, Bob the Builder, thank you so much for the $4 donation, my friend. Getting hyped in the morning. I could see you've got your coffee going on. He says, Justin, a system you taught me changed my life, brother. Thank you. Get those coffees ready. Well, we got those coffees ready. We got the magical, I can't say the last word for fear of demonetization mug today. Remember, guys, 2 hands on the coffee mug at all times. 2 hands on the coffee mug at all times. I see Minister C Politics. I see Bird, Challenged Investor. It's Hard, Nice Has Logan, YY Agency. I got Farbod. We got Yorick, Darren Garish. Good to see you guys in here. All right. Did I just repeat myself in triplicate? It is highly possible. All right, so we're going to be covering the hash rate and the difficulty adjustment. Obviously, Bitcoin had a big difficulty adjustment yesterday. And honestly, this is what I don't see anybody talking about. You know, I am a technical trader, so I look at the technicals. That is responsible for 90 to 95% of my trading decisions. If you guys are watching this channel, you have most likely done a lot of research because we do not attract I don't want to say that. We attract people of all types. You know, we have retail traders in here. We've got crypto newbies in here. We've got investing newbies in here, and that's totally fine. But we've got a lot of seasoned vets or people who are, we call them wet behind the ears a little bit. And that's good. That's what we want. We want a good mix. But the people who really tend to come and stay and hang around are the people who want to put the work in, who want to grow their portfolio, who want to be successful at trading and investment, who want to understand cryptocurrency, who want to be on the right side of history as well, and tend to come from a somewhat similar sentiment when it comes to the way that we look at the world, to the way that we look at politics, to the way that we look at economics, all of these things. And some people diverge a little bit, and that's totally fine. You don't have to be, the nice thing about Bitcoin is that it's not one size fits all. It's just sound money that you can use to build a better economy and a better society. And in good societies, there is disagreement. That's what we call, democratic debate. That's what we call the ability to have either a representative government or a natural democracy. Now, so what, referring to the technicals, so, a lot of individuals, for example, Anton Creel, who I look up to quite a bit, he does some good work over there. If you've watched I can't remember what it is. It was a UK TV show. It's on YouTube. Something about, like training retail individuals to be professional traders. That's a hilarious show. If you guys have not watched that, definitely go check that out. But obviously, Anton Creel over at the Institute of Portfolio Management. Pretty famous guy, trained underneath I can't think of his name now off the top of my head. But anyways, professional trader. And he says like trading is 90% fundamental and 10% technicals. And while that may be the case in traditional equities, it's not really the case, right? It's not really the case. Like, for example, there are a lot of good objective technical indicators that just tend to be right most of the time. For example, Bollinger Bands, RSI, they're not too terrible. You're definitely going to do better with those than with just staring at the chart or trying to understand candlesticks. Now, when you start looking at even better indicators that were made specifically in this modern decade for the assets that we trade, and you start pairing those together in a combination that allows you a higher hit rate, you start to do even better. That's what a lot of our traders have discovered also. But that whole 90-10 split, 90% fundamentals, 10% technicals, I don't think that's true insofar as the 90% of fundamentals is what has you in here trading Bitcoin in the first place, right? So the fundamentals are typically that price goes up. Given enough time, like investors do win, right? Typically, r/investing is more successful than r/Wall Street bets. But the technicals are important. The technicals are important. I don't know why I got off on that. I don't know why I got off on that off on that tangent. But the technicals matter. We're gonna look at the technicals today. Okay, I understand my point here. But there are some specific fundamentals, and they're not really even fundamentals. They're actually on-chain technicals, right? They are technical statistics that we can point to, right? So when we look at on-chain data, Bitcoin is unique in that we have the most data on this asset possible, right? When you look at stocks, when you look at equities, everybody says, well, you can't allocate for Bitcoin the same way because there's no PE ratio. There's no, company earnings report. There's nothing like that. Right. We've got a lot more. We've got all of the blockchain data. We've got all of the on-chain data. We have the most transparent sentiment data possible at any market ever throughout history. We know just about how many people are long, how many people are short, all the liquidations coming in. We know the fear and greed index. We know the funding rate. People even report their positions on Trollbox for BitMex, and BitMex whales report their positions on coinfarm.io and other websites that track this stuff. We have the longs to shorts ratios. We have open interest. We have open value that is updated like to the second, as opposed to the CMEs, or Quandl data, which generally updates every week, right? Longs and the open interest on the CMEs update like once a week. So we've got a lot. So hash rate, difficulty, the timing between blocks coming in, all this stuff is important. And the big thread that we're going to cover today is all eyes are on the miners. I've been saying this for the last week, right? I was saying this before the halving. I'm saying it after the halving. All eyes are on the miners. Mining is right now unprofitable. It is unprofitable, right? There's a free indicator on TradingView. If you guys have been listening to Charles Edwards on Twitter, he's been talking about this as well. Mining right now is below, it's unprofitable to mine. The average production cost for Bitcoin is around 11,000. So the thread here is that price in Bitcoin needs to rally relatively quickly. We just had a negative difficulty adjustment. We're going to go over that here in a little bit. We're going to break that down in fine detail when we get to our today's cryptocurrency segment. But overall, when you look at the on-chain fundamentals, the on-chain technicals, that is, not on-chain fundamentals, they're on-chain technicals because they're technical data that we can measure. They're statistics. If we do not have a rally relatively soon, then we're probably going to see a big, I don't want to say a big sell-off. Like when you hear people like me say big sell-off, right? Immediately everybody comes out of the woodwork and they're like 3,000, 1,000. I don't think we're likely to see price below 6,000. I don't think that's going to happen. We might go down to like the high 5,000s if we sell off here, but we'll just go back to the yellow accumulation box. It's an honest conviction. I think that Bitcoin is primed for a long-term rally. I don't think that higher five-figure price targets are ridiculous. We might even see six-figure price targets at the end of this next rally. I have a lot of conviction in that. The time is here. We've been waiting for a long time. We're primed. Everything is ready to go. The economic conditions are right. The money flooding into the system is going to push asset prices and equity prices up across the stock market, across Bitcoin. Bitcoin's gonna prosper from this. Other altcoins and other shitcoins are gonna probably prosper as well. It's going to be a good time. If you're in crypto, I think the next 3 to 5 years are going to be a relatively good time. Maybe probably the next 2 years are going to be a really, really good time. But the next few months might be hard. But it all depends. We can rally right here. And we go to the technicals, and when we actually look at the charts, we're going to break down how this can actually occur. But overall, the sentiment, in my opinion, and what I see from the data is that we need to see a rally relatively quickly. We need to be over 12,000. I think we need to get over 12,000 like today, tomorrow, the next day, early next week. And if we're not able to do that, then we're probably going to sell off until we have more pronounced difficulty adjustments and things sort themselves out a little bit. Or we're going to go in, or it's possible that we sell off back down to 6,000 and we have an extended period of accumulation for maybe 6 to 9 months. But accumulation in Bitcoin happens pretty quickly. It's usually only like 1 to 3 months, right? If you guys go back to late 2018, early 2019, we weren't down there that long. We weren't down in the 3,000s too long before we went on a mission to 14K. So the accumulation phase will, and the Puel multiple, indicates that we are moving into an area of accumulation again on Bitcoin's price, which at a much higher leg of price is a good thing. That means if we do sell off from here, or if we do correct, the correction will not be that drastic. It will suck for individuals that just bought this local top, but if they're patient, that's fine. We'll get back up there. We'll have good prices. So we'll get into all this. So if we rally relatively quickly and we can sustain 12,000, I think that we're ready to go on this moon mission. If we are unable to get above 12,000 relatively quickly, then it is very, very likely that it is actually more likely in general that we correct from here, accumulate for a little bit, and then go on said moon mission. With that being said, guys, if you have any questions, make sure to drop them in the live chat. The moderators will bring my attention to them. And again, reminder, like goal is 50 likes. Let's get those likes going. And I think we're 2 subs away from 8,000, right? We're a ways away from being able to do the Vegeta meme. But, with your guys' support, we can totally get there. All right, let's get rocking, guys. Into the live stream. Okay, here we go. What happened in the past, Matt Graham says, what happened in the past doesn't mean it will happen in the future. I mean, here's what happens in the past, man. Price goes up, price goes down, price goes sideways sometimes. I'm pretty sure that's what's going to happen in the future. Price moves from levels of accumulation to distribution and markup and markdown. All markets have behaved this way forever. And maybe Moon Mission is a little bit of hopium, but it doesn't, it's not, I don't really think it's hopium to think that basically an unfettered amount of money that is flooding into the markets is going to boost asset prices. And Bitcoin is an asset, so Bitcoin's asset price will rise. Stock market's going to go up. Bitcoin's going to go up. It's, maybe not immediately, maybe it'll correct, but, when you've injected trillions of dollars into the money system, that money has to go somewhere. And modern monetary theory does not like cash sitting around in banks. It doesn't like unfettered. It doesn't like unused capital. It doesn't like reserve deposit just sitting around. It doesn't like that. This is why we have fractional reserve lending in the first place. Because why do banks just want deposits that they're not earning interest on? It makes no monetary sense in our current with our current monetary policy. So this is why we have grossly inflated stock valuations, because that money needs to go somewhere to beat the rate of inflation, and to facilitate this entire system of usury that we've created with fractional reserve lending and offering interest and interest-bearing notes. And then there's the other thing, right? There's the Triffin dilemma. We have to provide global reserve liquidity, which is another kind of burden. I would say it's a burden on the central bank of the United States, anyways, because we are the sole producer of United States dollars, and because of the SWIFT system and international agreements, and for example, the petrodollar, we have to produce United States dollars for other central banks to hold in reserve. And that is at odds with our domestic agenda of having, at least on the right wing, of having a balanced budget, of treating the monetary system, like one would treat their personal budget, where you have a balanced book and all that. The federal deficit will never be balanced. The Federal Reserve balance sheet will likely never be balanced. It just is what it is. But anyways, coffee, man. I'm pumped up today. B-Flow asks, should I unsubscribe and then resubscribe? I don't think it works like that. Can't hurt to try. James May says, attention, we have never had 2 fake outs on the Golden Cross back to back. And we have already had the fake out in February. Yeah, I'm not a big fan of the golden crosses, right? Like I've back tested this. It depends, moving average. I've talked about this before, right? Moving average crossovers have some good stats behind them. They get you into the last 50% of a trend when there is a trend that is emergent. Other times they mark local tops and bottoms. And again, depending on what asset you test, right? It depends on what time frame you test, right? But if you go back and test I've got a chart on this on TradingView where I go through the daily golden and death crosses for Bitcoin using the 50 and the 200 period moving averages. And it's not a very good strategy. Like when it's right, like it's really right, but it's only right 30 to 40% of the time. And I've got that. It's on my, you guys can go check out tv.crackingcryptocurrency.com. And it's on my, not scripts, but charts. You guys can go back and look at that. I have that analysis of the golden cross and death crosses posted out. Now, the 13 and 55 moving average crossovers are pretty good, right? The 20 and 10, the 20 simple moving average and the 10 exponential moving average are pretty good crosses. They're I don't want to argue that they're more right, but it's just I feel more comfortable trading them. Tensor Charts has a pretty good default. I believe it's the 55 exponential moving average and the 23 period simple moving average, and that's pretty good. Moving average crossovers overall aren't the best way to trade, and I'm not a big fan of the golden crosses in general. I mean, it's a big bullish event, and when they're right, they're really right, and everybody feels really justified. But when they don't play out, like most technicals, it just gets swept under the rug and nobody talks about it, right? Like, oh man. All right, so on the daily time frame of Bitcoin, we are still consolidating right around the zone of the baseline. We've got some chop. Some days we're above the baseline. Some days we're below. We sustained a close above the baseline yesterday. Spot long is good to go. Parallax going crazy down there. So again, overall, we're in a period of chop. So I am going, and Wadatar explosion does indicate rising explosion level on today's daily time frame. And on Minx right now is still signaling bullish momentum, right? We are still above the noise line or the signal line. We are still above the zero line, so we're still in bullish control zone. Again, also above the baseline, also above the breaking Bitcoin initiator. We've been above the breaking Bitcoin initiator since we closed back above it on the 14th of May. So overall, the trending statistics are showing us that we are in what we can refer to as the bullish control zone. Therefore, price is theoretically more likely to move up than move down. I've got some contrary thoughts to this, and this will be clear as we kind of go through and look through the charts, and when I kind of reveal the trades that I've put on, which of course the premium members are always updated on, and we're updated, of course, this morning right before I went live because something went down. I'll show you guys. There's some interesting stuff. There's some interesting stuff going on later today. So we've had a little bit of chop, and I talked about this yesterday, guys. It sucks when it happens, but it's not always like this, right? This is why. The most important skill for any profitable trader is not your technical analysis. It's not how well you read charts. It is not your analysis. It's not how good you draw your trend lines. It's not how good you spot divergence. It's not the quality of your indicators. It is your position management. It is your capital management, right? That is it. That is the biggest skill. That's why we focus. So when you come into our educational course, one of the first topics is risk management. And we have a lot of material on risk management, a lot of tools, a lot of calculators, because it is the most important thing. Because trend following trading is excluding, and I would actually argue this, you have to have an edge to trade, right? One edge is that you can trade faster, right? And this has taken all sorts of developments over time, renting out the building or the office complex floor above an exchange's server, and getting your server as close to the actual trading server as humanly possible. That's an edge because now you can trade faster. This is high frequency trading. This is market making. This is arbitrage. So that's certainly an edge. And there are lots of people who do that. And when I say a lot of people, certainly like a very small portion of actual market participants, but again, it's not like 10 guys. It's probably several thousand people in the cryptocurrency markets. So you've got that. Another edge is you can have an information edge. You can know things that the general market does not know. So, for example, you could be Arthur Hayes. So you can have an edge with information. The other edge that you can have is by taking advantage of the most common edge in trading, which is human psychology, right? Now, this takes a few forms. You can trade against retail sentiment, right? So this is, like my friend Bennett over at Bitcoin Trading Challenge, he focuses on this a lot, right? Trading against retail traders. I prefer to focus on the even more common edge, and the edge that I think is the easiest to exploit, which is the market's propensity to trend. Markets have a few key characteristics, and one of them is the herding effect, right? When markets begin to trend, they tend to trend for quite a long time because of the herding effect, because of human psychology, because of mass psychology, because of FOMO, all of these things, right? So it really encompasses everything. But, trends only emerge 30 to 40% of the time in the market. So although these set you up for the most profitable trades and the most consistent profitability, in my opinion, you have to be prepared to deal with non-trending market conditions. And the way that you do this is not by stopping trading. I've seen all different styles and attempts to implement like how can we determine if the market is going to trend or not? As if there is some perfect indicator that will let you know that the market is just not going to. There's nothing that's 100%. This is why this is why we look at things like volume and volatility, or why I do at least, so that we can better determine periods that are more statistically likely for the market to break out or trend. This is why this is one of the biggest components in my PTP system, volume and volatility filter. But it's not perfect. So the main way that we deal with chop is by position sizing appropriately. We approach the psychology of capital management with the psychology of the poker table. We keep our chip loss small. So when we're in an adverse market condition and we're getting chopped around, yeah, we're losing money, but we're not losing much money because we're keeping our risk low, right? And so when we actually do trend and breakout, it's relatively easy to recoup any loss that we made in a chopping environment and then take that next leg up on our equity curve. So very important to consider. With that being said, I wanted to bring up an indicator that I actually quite like, which is the money flow index. I'm a big fan of the money flow index. I've talked about the money flow index quite a bit. And I think that the traditional money flow index is really good as a centered oscillator. But I've come across a pretty neat indicator on TradingView. It's free. It's called the dynamic money flow. There are, I'm sure, certainly better indicators out there, but it was just one that I wanted to kind of bring in and look at. And the dynamic money flow is just another centered oscillator. It lets us know overall it's a centered oscillator. So if the line that we're looking at measuring is above 0, then that indicates that there is positive money flow. If the line is below 0, then that indicates negative money flow. And this has been a pretty spot on indicator, right? Just back testing it, just casually back testing it over the last few years. It has been pretty spot on with Bitcoin's price. And there's different ways to do this. You could throw another moving average on here. You could, you could analyze the slope of the angle, for example, all kinds of things that you can do. But overall, we do see positive money flow. So on the higher time frames here, we do see, as we are above the baseline, we're above the breaking Bitcoin initiator. Minx is relatively bullish. Parallax is choppy. Wadatar explosion is at a pretty high level of volatility right now. So that is overall good. We haven't seen this decline. If we start seeing a big slope down in the explosion level, it would indicate that we're going to have more consolidation. But we are also consolidating at resistance. And one could argue that we are pushing at that $10,000 resistance several times. If you guys will recall, one chart pattern that I actually do like is, I don't really have a name for it, but we test resistance, we form, some people are going to call it an ascending triangle. Some people are going to call it, whatever they want to do, an ascending trend line. That's not really how I look at it. The way I look at it is just, kind of how I think and how somebody who doesn't understand chart terminology would look at it, right? You can see that, we tested resistance here. We sold off, but we made a higher low. We immediately rallied back and tested resistance again. We tried to sell off, couldn't make it very far, popped right back up and tested that resistance. And yes, we are stalling out. Most people would say that that is bearish. However, if we do something like this, if we invert the chart, I think that most people would argue that, man, that looks like, I guess it depends. Some people would say that we're going to pop to the upside. I would argue and say that that looks like it wants to break down when we look at the inverse, right? I would look at that and say that it wants to look at the inverse. This is why I don't like double bottoms or triple bottoms. So maybe that's my bias. But anyways, I do like to see, and again, this back tests relatively well. This is a chart pattern that one can test. My rules on this are fairly simple. After the second test or after the third test, we have to form a higher low that does not close lower than 50% of the distance between the previous swing high and the previous swing low. That distance would be here, and we can prove this with our favorite indicator around here, Fibonacci retracement. Okay, Fibonacci retracement. Here's the 0.5 or 50% retracement, and actually the low stayed above that. We stayed above the low stayed above the 50% retracement. So the fib level don't matter. I don't like fib levels, but the 50% mark, right? So we did do that. And now we're testing that resistance again. So this is relatively bullish in my opinion. So we've got a good potential here to break out. We need to get some confirmation, right? Now you can front run this and be a little early. Overall, I am still trading the range. And, but the signs do look good. The signs are not gone that we can have a nice bullish break here, but it's got to happen quickly because, again, a lot of individuals would look at this chart and say, hey, that's a double bottom. We're going to break up here. A lot of individuals look at this and say, hey, that's a triple top. We're probably going to break down here. And that is possible, but we really need to break some levels. So overall, what I would be watching for, and the breaking Bitcoin indicator confirms this, if we just look at overall price action here on the daily, I would like to see a break of 9,000. I think we can front run that actually a little bit and say 9,300, 9,200. If we break that level to the downside, then most likely I think that this is going to be our local top, and we are going to end up breaking these lows right here, and we can anticipate, to at least test the $8,000 range. So price targets of 8,700 and 8,300 will be valid. Maybe even lower if we start really getting down here and putting on trending downside signals. Then we'll be targeting, as we were looking at earlier, Quadriga ATR right now on the daily. Remember that our volatility is tightening, so our take profit levels are going to be getting a little tighter. Quadriga only has us moving down to 78.81 from current price levels. But again, those are the levels I would be watching. And again, anytime we start to come up here and start trading above 9,700, 9,800, God forbid 10,500, that's a level to get excited about. And we kind of looked at this with... we're on the ByBit chart right now, so let's go over to the Bitstamp chart. Hold on, I got to find my magical lines. Here we go. Yeah, 10,200 would be pushing us above the red box territory of the volume profile analysis. 10,500, but again, the level, and I talked about this yesterday, the level that I think is equally valid to get above. This is 11.9. I would say 12.5, 11.9, 12.5. It's a good, nice band there. It's about $600. Trading above this level is, I don't know. That's a real, let's break, right? Consolidation at that level indicates that miners are profitable, and I think we can sustain this bull rally going forward. All right. So that's, pretty simple basics here. Pretty simple basics, guys. Price is consolidating at resistance. Generally, I'm inclined to think that that's bullish. If we break up, again, so I'm still playing the range. I think that's the best thing to do. We can see that the altcoins are doing well. So looking for altcoin opportunities, continuing to look for altcoin opportunities until Bitcoin confirms the breakout by closing above resistance here and putting in the trending indications to trade to the upside. That's the main thing that I'm watching. There's nothing that I'm saying that's incompatible with PTP. We don't have any trending signals to actually put on a position. So there's no daily position to put on. Volatility is low. We need to see rising volatility. We need to see a good volume indication to be trading to the upside here. We are above the breaking Bitcoin initiator. Minx is postured bullish. Parallax is chopping around. Wadatar explosions flips on and off. So we need to see all of those things align in a perfect storm to be taking this breakout trade. So watching the highs, watching the lows here, watching for that breakdown below 9,200, I think would be bearish and actually signify that this is a top, and breaking above the 9,800. Really the levels in order of importance. 9,800, you can start to look for a breakout long. 10,500, you can feel pretty confident that we're breaking out. And then, I think you want to pause. I don't know. For me personally, if we're trading above 12,000, I'm going to be long to the gills until I see weekly reversal signs, which would be huge wicks to the upside, massive sell-offs, significant changes in the longs to shorts ratios, massive amounts of liquidation, things of this nature, right? anything that would indicate like a weekly top, because they're pretty easy to see on the weekly time frame. Like tops are relatively easy to see. Like they always kind of have this same, high wick, doji pattern, kind of characteristic to them. Bollinger Bands, extreme, looking at minks, getting into that overbought level on the weekly, not on the daily. Daily overbought levels don't really matter, in my opinion, not for minks anyways. Yeah. Okay. So price is relatively easy here, I think, on the daily. Everybody just stick to the plan, stick to the rules. Everything's fine. All right. Let's go look at the meso timeframes, because the meso timeframes here are interesting. I want to talk about today's price action because overall it's kind of interesting to me. So BitMex obviously went down earlier. So we're going to look at a BitMex stat here in a little bit, and I am not sure what to make of it. I'm not going to lie. Keep that in your head as we move forward. Keep that in your head as we move forward. All right, so here's the, let's start on the 4 hour. All right, so bots today are silent on the daily time frame. We've got bottom feeder being quiet. We've got the Cybot being quiet. Nothing to do here. Everything's fine. Nothing to look at. Same on the 2 hour. Bottom feeder being quiet. Cybot being quiet. Totally cool. Yesterday, this is the 2 hour time frame. So last night, actually, before I went to bed, I went ahead and took a long. You guys can see my entry right here. Almost made it. And now price is, relatively sold back down to my entry. Now, I've gone ahead and put on a short. As I said, I'm just playing the range, move my stop loss to break even on the long. So we'll see if time will tell what position I'm going to be right on. Overall, I'm just taking advantage of the divergence in price in this range. Just as I talked about yesterday, playing the range, putting on shorts when price gets to the top of the range, putting on longs when price gets to the bottom of the range. And Minx gave us, these beautiful, entry right here with going into the oversold level right here, which is what initiated my entry. And then we had a nice, overall, we have to ignore that. These are nice trending conditions. Didn't give us two very good buy signals. But again, if you would have DCA'd, we'll see. And the 4 hour buy, we see if that ends up being justified or not. And then the continuation long wasn't too bad. You definitely would have hit TP, but you would have sustained some drawdown moving forward with that CL. All right. But I want to get over into today's price action. So let's go down to the 45-minute time frame. All right. So ISA spot's been quiet since it called the sell right here, giving that a nice 1 to 2% movement. Overall, been quiet. Again, same kind of potential buy right here, which would have given you about a 2% movement, and then didn't call a short, didn't print the signal, but you can see ISA spot getting into overbought territory right here, and did signal that move to the downside. Now we talked about the BitMex funding and premium index yesterday. Okay, talked about this yesterday, and I want you to look at this level of the premium index. Okay, and I'm going to start zooming out, and you tell me if you see an outlier. You guys see an outlier? Oh, wait. The answer is yes. The answer is yes. This is a massive outlier. Now, here's the reason why I'm a little conflicted on this. Because BitMex went down this morning. So I am unclear if, because these stats are, because of the basically lockdown of arbitrage for about an hour, and we'll cover this in just a little bit, if this is skewing this number a little bit. Now, if it's not, then this is likely marking a local top. And was one of the impetuses for why I did go ahead and put on the short, right? It's one of the reasons why I put on the short. But if it's just statistical garbage, if it's GIGO, garbage in, garbage out, then I'm glad that I still have that long position open. Because overall, I'd like to play the breakout here, right? Still spot long on Bitcoin. Playing my short position here. Still got a long position on too. So definitely something to consider here. But again, when you see outliers like that, I mean, you got to play on them, right? You got to take a chance. But other than that, ISA spot on the 45-minute time frame is right in the middle, indicating that we're in the middle of a range. It hasn't gotten oversold, hasn't gotten overbought yet, so nothing really to do. Renko trend's been choppy. Let's take a look at the Heikin-Ashi trend on the daily here. Heikin-Ashi trend is still bullish. Heikin-Ashi trend's been pretty good at spotting sustained upticks right here. And again, Heikin-Ashi does help smooth parallax out quite a bit. And the parallax signals on Heikin-Ashi aren't too bad. I'll have to add that in because on the latest Wadatar explosion strategy tester, which again, in my opinion, is the most robust strategy tester on TradingView. I added in the ability to choose Heikin-Ashi close as source, and I should probably do that for the parallax indicator. I'll do that with the next upgrade to parallax. CME looks relatively good. We're in an entry area for taking continuation longs. CME is above the baseline. Give us a nice baseline bounce here. Give us a nice baseline bounce here. CMEs we want to break down below 9,300. So again, everything pretty confluent there. A daily close below 9,300 is going to be relatively bearish right now at this point in time. Daily close back up above current resistance here. We mark these levels out back above the CME gap at about 98.20. That again, 98.20 is fine. That's current daily resistance, roughly overhead of where we're at. 10.5, 12.5. These are the areas that we need to be watching for. And the SPY having a relatively okay day. Rallied earlier, sold off a little bit. Excuse me, actually, as the day started, tried to sell off, but overall, just relative doji after a nice push movement to the upside yesterday. VIX normalizing. I know some analysts calling for a market dump after VIX normalization, but VIX is still twice as high as it was pre-coronavirus pandemic. So we've got a ways to go before the VIX normalizes. Some people will do anything for headlines. All right. All right. Let's talk about BitMex going down. Obviously, BitMex's trading engine, this is old, this is a little bit of old news, but BitMex trading engine was down, is now back up. So let's look at the actual BitMex status here from status.bitmex.com. See if here we go, past incidents, here we go. So at 12:13 UTC, they initially posted that the trading engine is currently offline. They posted an update at 12:28 and at 13:29, right? So a little over an hour later, they brought the engine back up in cancel only mode, which means you couldn't put on new positions. You can only cancel existing positions. And then about 30 minutes later at 1400, they confirmed that trading has resumed at 1340. Withdrawals are going to be processed at 1400 and 1500. And they just posted a new update just a while ago that the platform is back up to full capacity. It has been since 1340 UTC. All secondary checks are complete and support agents are resolving tickets. 2 withdrawal batches were done today at 1400 and 1500. Teams are assembling a full postmortem, which will be shared publicly within the next few days. Let me guess, it was a slow botnet attack, right? And they're going to exclude the hour and a half period for funding rate calculations on perpetual swaps. So we have no information as to why the BitMex trading engine went down. This was all over Twitter. A lot of people upset by this, as they rightly should. Again, I've been fairly critical of BitMex. I don't know, I don't really want to take a stab at low-hanging fruit here, right? We did this, obviously, BitMex embroiled in a lawsuit, and we covered that yesterday. And overall, I'm fairly critical of BitMex. But, I don't really want to take the stab at low-hanging fruit here, but here, I'll give it a shot. Here's the thing. It is what it is, right? Like BitMex is... It's that exchange, man. It's that exchange. It's like you never know what's going to happen. I thought it was pretty funny. I think he's a BitMex shill, but he was posting earlier on Twitter like, man, you can really tell how many people trade on BitMex. When other exchanges go down, you don't hear nothing. When BitMex goes down, that's all you hear about on crypto Twitter, which is true. So a lot of people obviously do trade on BitMex. And I would encourage them to start seeking out more sustainable options and better platforms. Again, I trade on ByBit. If you guys would like to trade on ByBit with me, there is a link down in the description, bybit.crackingcryptocurrency.com. They're always giving bonuses away to new traders, so make sure to check that out and take advantage of that if you qualify. But I mean, ByBit is better than BitMex, FEMX, FTX. I mean, the list goes on and on. Heck, not a big fan of Binance futures, but Binance margin's not too bad. So a lot, the thing is, BitMex was allowed to run, a pretty crappy operation because they didn't have a lot of competition. But the times are changing now. They have some steep competition, and if BitMex doesn't start, at least fix their trading engine, right, with the system overload thing, that's the worst thing. But hey, I'm not gonna go after low hanging fruit. All right, Harmony. If you got, for the altcoin fans out there, Harmony obviously was an IEO. It was launched in conjunction with Binance. Binance did their IEO, was relatively successful. Like most IEOs that came out in 2019, price pumped and then immediately dumped. And then it's just been a tradable asset ever since then. Overall liquidity has kind of resolved out. Obviously, of course, there's still, you have to know that there's some overhead hanging liquidity because there's investors that haven't sold their coins yet. But Harmony has launched staking, and now they are the first sharded proof of stake blockchain to be live on the main net. Now they're going to be working in conjunction with Binance, Huobi, and BitMex crypto exchanges. So again, Binance does this with a lot of other coins like Tezos, for example. Now I hold Tezos, and I stake or loan out my Tezos to another, I think it's Masternode operator. And so I just get rewards, and I do that through my ledger, right? I have my Tezos on my ledger. I just click a button that utilizes my Tezos as part of a Masternode or staking, and I receive Tezos rewards. That Tezos isn't going anywhere. I like sitting on Tezos, so I just get free Tezos. I talked about also, I now provide liquidity to the Uniswap exchange. So ERC20 tokens that I have that are just going to sit around, I'm now earning interest on them. So good stuff. Harmony is promising its investors to earn between 45% and 15% annually for the first year. So again, I don't have a lot. I'm not, I'm not extremely bullish on Harmony in general. But if you are, right, definitely a good opportunity. If you're going to be sitting on Harmony, stake it, right? Get involved, set it up. It's going to take you a day or two to figure out how to do it. If you're sitting on your own, don't make any mistakes. Or, if you're going to keep your funds on Binance anyways, just do it through Binance or Huobi or BitMex or whatever. I don't trade on BitMex, but funds probably aren't going anywhere on Binance and Huobi. So there's more information. The link will be down in the description if you guys want to learn more about Harmony and staking. But pretty cool. Pretty cool. All right, let's see here. Rhino TD says BitMex was changing their code in preparation for the lawsuits. Very possible. All right, let's blast through some Forex pairs here real quick, gentlemen. And then we'll get into today's cryptocurrency segment. Overall, we talked about the Aussie Kiwi looking pretty good today. Australian dollar rising again. Commodity prices looking good again today. Continue to be on the rise as the SPY continues to rise. As traditional markets continue to look pretty good today. Getting over apparently the fear over this, U.S.-China trade war. But again, let's see how the middle of the week plays out. See how the weekend slump. I think the weekend slump might hit us pretty hard. But again, I'm bullish. I flip bullish on my positions because you trade the way the technicals describe. So the Aussie yen overall looking relatively good. Aussie Kiwi giving us a reversal baseline bounce potential setup today. Australian Canadian, not there yet, in my opinion. Aussie dollar is looking like a potential long on today's daily close, as is the Canadian Swissy. Canadian yen, I'm already, I have to double check. I think I ended up taking profit on the Canadian yen yesterday, but I'll have to double check. Swissy yen's past the point of entry. Euro Aussie is in a no trade zone. Euro Canadian is in a no trade zone. Euro Swissy, man, Euro Swissy. I don't know what's going on with the Euro Swissy. That's the Euro Swissy screwed me. I'm not gonna lie, but just one losing trade. It is what it is. All right. Euro Kiwi in a no trade position. Euro Pound in a no trade position. Most likely a profit taking posture. Honestly. The Euro Yen, no trade zone for me, just pushed with too much volatility. Euro Dollar as well, too much volatility. I'm short on the Pound Kiwi. Pound Canadian is in a do nothing position. Pound Swissy is in a do nothing position. Pound Yen is in an exit short position. Pound Dollar is in an exit short position. I'm short on the Pound Aussie. Kiwi Dollar is gearing up for a long, but not quite yet. Kiwi CAD's in a take profit position. Kiwi Swissy is in a take profit position. Kiwi Yen is gearing up for a long, but not quite there yet. I'm short on the Dollar Canadian, moving in my favor. The Dollar Swissy is in a no trade position. The Dollar Yen is past the point of entry. The Australian Swissy is one to watch for a long. The Dollar UN is one to watch for a potential short. That's about it. Not a whole. I mean, obviously some good volatility going on, but we just went over. Look for those entries, and again, trade as safely as possibly can. Again, my first like 4 months of 2020, we're ripping into the Forex market. I mean, I felt I was going to get a call from the central bank. The last 2 weeks, I've been getting chopped up. So it's just overall just giving back some of my gains from the last 4 months, but not a significant amount. I'm probably down 3% of the overall equity that I've earned over the, actually it might be around 4, over the past month. And yeah, we've got good trades now moving in our favor. Dump the losers quickly. Caprica says, I hit that Euro Swissy FU candle. Yeah, that is an FU candle for sure, man. So let's just run through this one more time real quickly. Aussie Yen is going to be on my watch list. Aussie Kiwi, no. Aussie CAD, no. Aussie Dollar is going to be on the watch list. Canadian Swissy is going to be on the watch list. Swissy Yen, no. Euro Aussie, no. Euro CAD, no. Euro Swissy, no. No Euro Swissy. Once bitten, twice shy. Euro Yen, no. Euro Dollar, no. I already have pound exposure, so no. But I do see the pounds rallying, so we'll be kind of looking to look at that. Kiwi Dollar is going to be on my watch list moving forward, but certainly not for action today. We're going to put the Kiwi Swissy on my watch list as well. Dollar Swissy, no. Dollar Yen, no. Aussie Swissy is going to be on my watch list moving forward, but not for action today. And the Dollar Yuan, UN is going to be on my watch list, waiting for that breakdown below 7.10. All right. Let's take a look at the Dow. Let's see here. Dow giving us a potential entry. Entry on a Dow long is still valid above 242.90. Daily close below 242.90 is going to invalidate longs at this point in time. Let's look at the SPY. Same thing. SPY entries are valid only for today. 1 day only sale for longs on the SPY. Invalidation on a daily close below 291.83. And where's my Qs at? There we go. Q, same thing. Looking valid for an entry. Invalid below 224.97. This Fixie. Fixie might be valid for a long if one wants to short the VIX. We do got quite a bit of ways to go. I could see this Fixie hitting 40. Invalid below 32.58. So trade safely on this Fixie. It's a volatile beast. And let's take a look here. This is, we took PDBC, went long on the continuation sign from PDBC. Massive, beautiful, bellissimo trade. Not doing too much today, but again, in a fantastic take profit area. Took the USO long at the same way. Massive gap up in our favor. Beautiful trade. Hope you guys caught the USO with me. Check out CPER. Right around where we roughly entered. Not a fantastic day for copper. Let's see. JJT. JJT decided to hold. Yesterday had the thing, popped right back up. Now we're in good profits back on JJT. I know what I'm doing. All right. That's about all we got. And then we've got Bitcoin, obviously. Ethereum. Ethereum, we're not long on right now. We need to get above 221.45 for Ethereum. EOS above 2805, and XRP needs to be above pretty much 22 cents before we're going long. Until then, we're just in a no trade zone. If you want to take the reversal up to that level, that's fine, but invalidation on XRP, then in that case, going to be 1993, EOS USD 258, and ETH, if you want to go long ETH, and invalidation at 202.74. Let's take a look at our precious metals real quick, sorry. All right. Ended up taking profit on our gold long, went long here, took profit at the daily baseline and the initiator. I need to see gold. I need to see ZAO above 1750, 76 before I get long on ZAO again. Palladium's on my watch list, but it just moved with too much volatility. I actually missed the optimum entry. Wish I wouldn't have done that. Need Palladium to actually, excuse me, no, I didn't miss the entry on Palladium. What am I thinking? I missed the entry on Platinum. I need Palladium to come back down into the entry zone. And I've been long on silver for a while. I bought some silver yesterday. Talked about that. Yeah. Go, baby, go. What else do you guys want me to say? Price set not a trailing stop loss today. Try to ride this gains out as much as possible. Yeah, Platinum. This is my bad, guys. I missed the entry on Platinum. Should have gone long on Platinum right here. There it was. And I would have caught this beautiful trade to the upside. This is going to have to be one that I miss now. Hey, sometimes them's the ropes. All right, with that being said, let's get into today's cryptocurrency segment because I want to cover today's news. Give me 1 second to get everything pulled up. Open. Oop. Oop. And we'll get rocking, guys. Welcome back, guys. Hold on. Still getting everything set up. All right. All right, here we go. So, a little over a week ago, on May 11th, the Bitcoin blockchain underwent its third halving event ever. That is the once every 4 years occurrence, where the miner's subsidy, which awards them fresh Bitcoin for every block found, is automatically cut in half. And this was a much hyped event with, lots of trumpeting and fanfare, right? People painting their faces with Bitcoin symbols like you would see at sports events, right? And this was really portrayed as the springboard that's going to take us into new all-time highs in due time. But the 2020 halving is kind of shaping up to be pretty uneventful so far. Again, a long time frame is required, but price has remained stable in the $9,000 range. We haven't really seen the fireworks or the drama of a catastrophic collapse to the hash rate, although it is down quite a bit, and nor have we seen this massive bull run to the upside. Instead, the Bitcoin community is moving along to the next major milestone for the blockchain, and that is the first scheduled difficulty adjustment since the block reward halving, right? As has taken place, expected to take place later day, pushed back. The halving occurs roughly every 2 weeks. And it's another automatic mechanism built into the network to help block production run along smoothly. And like the halving event itself, the difficulty adjustment that we're going to see is expected to be largely uneventful. And it actually speaks volumes about the maturity and robustness of our Bitcoin network after the halving event, right? So, do a quick recap of what difficulty adjustment is and why it is significant right now. As you guys probably know, Bitcoin miners use raw computational power to solve the block riddle, the block puzzle. This is what generates the next block. They solve the riddle, they get the mining reward. They prove to the world that they mine the block, right? Now, the amount of computing energy, the amount of resources, right? This is raw processing power, which they have to pay electricity for to process. That is committed to the network is referred to as hash rate or total hash rate. And the more hash rate that a miner has, it means the easier the blocks are to solve theoretically, right? Now, too much hash power would result in blocks being found too easily and therefore too quickly. And as Bitcoin is intended to have a new block minted roughly every 10 minutes, the difficulty adjustment is the mechanism designed to respond to the overall hash rate of the network. If blocks are being found too easily, overall hash rate is very, very high, the difficulty adjustment rises, right? Difficulty adjusts up, slowing the miners' work down, making it harder for them to solve the block riddle. Now, the inverse is true as well. If miners depart the network or turn their machines off and the hash rate drops, then finding a new block becomes more difficult. It takes longer than the intended 10 minutes. The difficulty adjustment adjusts down, the adjustment goes lower, and that makes it easier for miners to find the next block. And this is good for struggling miners. So this brings us to about a month ago, right? The Bitcoin Cash and Bitcoin SV blockchains were undergoing their own halving event. Of course, a month earlier than Bitcoin itself. Some people will do anything for publicity. And this result, so post-halving, we saw, again, many miners, the majority of miners on BCH and BSV become unprofitable. So they moved over to Bitcoin, where they would get a proportionately larger mining reward for contributing their hashing power to a mining pool. Now, so they moved over to mine Bitcoin, the actual Bitcoin main chain, because that was far more attractive to the miners, because the halving on that network wasn't due at that point in time for another month. Well, back at that time, with less than a month to go to Bitcoin's halving, miners then flooded into the Bitcoin network, in an attempt to get one last shot at collecting some of the last 12.5 block reward before the halving cut that subsidy in half to 6.25. And this resulted in hash rate getting pretty high, ballooning over the last month. And the last difficulty adjustment that took place 2 weeks ago jumped dramatically to reflect the influx of additional hash power. Difficulty adjusted up, making blocks harder to mine. Now, this all adds up to the Bitcoin network accumulating a lot of hashing momentum going into the halving last week. And difficulty was also very high as a result. But immediately following the halving event at block 630,000, miners began dropping off from the network. But with the difficulty adjustment not for another week, the miners remaining on the network were left in an awkward position. With block rewards cut in half and the difficulty sky high, this first week post-halving turns into a pretty intense nail-biter, because the difficulty adjustment that is due to arrive and level the playing field to better reflect the current hash rate post-halving wasn't going to be for another week. That is today. So miners have dropped off since the halving event, right? The difficulty adjustment is also expected to drop off later today to compensate. Now, let's look at the latest data from Bitcoin's difficulty estimator, right? Today's difficulty adjustment is around negative 5.8%. Now, an adjustment to the tune of 6% is significant, but not excessive or indicative of any major issues to the network, even with us being in a post-halving environment. And this is where the cause to celebrate comes in, right? Many Bitcoin naysayers, you know who you are, warned that profitability post-halving is going to collapse, and as a consequence, miners are going to abandon the network en masse. They're going to collapse the hash rate. Difficulty is going to be set sky high. The remaining miners are going to struggle to even produce enough blocks to get us to the next difficulty adjustment. Dogs and cats sleeping together, absolute pandemonium. Right? Now, this, of course, describes the FUD known as the miner death spiral, or catalyzing capitulation of miners. We've discussed this on the show, right? We talked about this as a legitimate concern. But what the 6% difficulty adjustment to the downside tells us is that post-halving, Bitcoin has still managed to incentivize the majority of miners to remain aboard. We'll talk about a few reasons why. By reaching the first difficulty adjustment roughly on schedule. This does mean that we have survived what should be the worst of the post-halving mining environment. And with the difficulty set to drop later today, this means that mining is about to get a touch easier for the next 2 weeks. Meaning, miners who may have left the network last week might hop right back in by the end of day today, right? It might tomorrow, we might see a massive increase in hash rate. So with that said, we hope you appreciate a little better why today's difficulty adjustment is some cause for celebration, right? It does show that even in unfavorable mining conditions. The Bitcoin blockchain continues to hum along, problem-free, no interruptions, everything's fine, nothing to see here. Now, Oris Turdemeester, he's the founder of Adamant Capital, among other things. He was talking to Masari Research in an interview. This was published yesterday, which can be found here, and I'll drop the link in the description for this. But he says in this interview, quote, it's validating that Bitcoin is just like a perfect little clock, and it just keeps ticking, and we can rely on it. Right? Good quote. Demeester took the opportunity to draw a contrast with another monetary construct, that is the traditional financial system, where central banks such as the Federal Reserve have unilaterally injected trillions of dollars of COVID-related stimulus into the global financial system this year. While central banks say that this intervention is necessary to save the economy and global markets from collapse, of course, we have to consider what banking officials are doing is effectively just making up monetary policy on the fly because they don't know what they're doing. Nobody understands global economic politics, just like nobody understands quantum physics. Quoting Demeester a little bit more, he said that it's just it's such a contrast with the craziness in the central banking world, with all bets being off. Who knows what's next. He kind of went on to talk about price targets as well. It's a pretty good interview. Meanwhile, the variables that constitute Bitcoin's monetary, so in contrast, right, what makes up the Bitcoin blockchain, its monetary policy is hard-coded into the protocol, right? There is no emergency intervention by the spirit of Satoshi on the blockchain that is sensitive to the clamoring needs of the community or the miners, right? Instead, there are simple and universal and open source rules that the blockchain plays by, and that makes everything as predictable as a ticking watch and attempts to keep the playing field even and fair it is designed to keep the playing field even and fair to all participants involved, right? This is mathematical certainty. This is what Bitcoin offers to its operation and its monetary policy. And this stands in massive contrast to the, let's call it the funny money fiat systems that the central banks operate. Now, another important relief may well be on its way thanks to the difficulty adjustment as well, right? Block times have slowed down post-halving. Some estimates are putting the average at clocking in at about 18 minutes per block, and that has caused transactions on the network to back up. The mempool is not in a massive state of congestion, but it is relatively congested compared to what we've seen with the efficiency of miners. Here's the mempool size in bytes. The mempool size is relatively high. If we take a look at the Bitcoin mempool chart, which is the aggregate size in bytes of transactions waiting in queue to be confirmed on the blockchain, the backlog has started stacking up since the halving event, right? Now, I expect to see this start stacking down after the difficulty adjustment later on. Hash rate goes back up. But since transactions are backing up over the past week, senders looking to be included in the next immediate block for the purpose of a faster confirmation time for God only knows why. Generally, when you need to send a transaction on the blockchain, it's okay if it takes a couple hours to get there. But they have had to increase their fees to get priority. So fees have gone up a little bit on the network. So average transaction fees have risen to about $4.90. They were about $2.38. And this is the highest in 11 months. That's according to data from Delphi. Now, this is where today's difficulty adjustment comes in. If we make it easier for miners to find new blocks, the network should automatically bring block times back down to around 10 minutes. And this should result in more mining power coming back online again, according to Delphi. But this is also just the mathematical certainty of Bitcoin. Now, Matty Greenspan wrote to clients in a newsletter on yesterday, that the difficulty adjustment should help to clear the log and return the fees to normal. All right. So again, this is relatively normal, nothing to freak out about. Right now you've got Bcashers and naysayers crawling out of the woodworks, but everything's totally fine. So Bitcoin continues along just like clockwork. And in some sense, this whole halving event and past week have actually been refreshingly dull. Okay. Now, with that being said, that does not change the fact, a few editorial notes here. This does not change the fact that overall that mining is still unprofitable. And my overall expectation is that we are going to see sell side pressure increase, which will cause Bitcoin's price to correct. if we don't see a rally in price, right? If we see a rally in price, then moving forward, like miners have yet to fully adjust to the new normal, right? And to their credit, we haven't seen any panicking capitulation, right? This is good because all eyes are on the miners. If, because you can see miners selling from a mile away. If the miners start dropping excess BTC onto the exchanges, that increases sell side supply. And because kind of I don't know if I want to argue that the hype is dying down. It's really not. I'm starting to, everybody that I'm talking to is noticing like people that aren't normally interested in Bitcoin come around asking like, hey man, how do I get into Bitcoin? Which is either a sign of a bull run about to begin or the sign that a bull run's relatively over. I don't think that we're likely to see price back below 6,000. Again, maybe 5,500. I do think that if we do not see a rally relatively quickly, miners are going to have to kind of accept the new normal and they cannot, they're fronting right now, in my opinion, right? They know that all eyes are on them. They're bullish. I think the sentiment is bullish in the environment, and they are looking forward to a rally and price to go up, right? Miners are no less tied, right? Miners are no less tied to the dynamics of speculation than anybody else, right? It just depends, right? Not every single business operator runs their business like Jeff Bezos, and I would argue that Bitcoin miners even more so, right? So the idea that you can just accurately predict what miners will do is kind of silly. What you can do is look at statistical probabilities, right? Mining right now is unprofitable. With the difficulty adjustment going down, it'll be easier for miners to solve blocks, which will help. But that still does not reduce the production cost for the average cost of Bitcoin. Now, we don't know exactly, like you would actually have to look into, this is just an estimate, that average cost, production unit cost is an estimate. You actually have to go look at the actual efficiency of the operational cost. It's about to be the rainy season in Sichuan, and that is going to bring energy costs down. Bitcoin miners that are located in that region, which is a large amount of Bitcoin miners, are going to be able to negotiate better energy prices. So all of this does kind of lead us to miners being able to sustain. And I would argue that with this kind of run that we've had, I think that a lot of miners are well capitalized and have a nice cash buffer, right? So I think we'll be okay, right? Less well capitalized miners, it just all depends, right? If we've got a good chunk of miners out there that aren't well capitalized and they feel pinched because the new difficulty adjustment, if price stays around 9,000, then it's more likely that we correct down to 6K. What we need is a nice, strong, sharp rally up to about 12K, right? Pushes miners to be profitable. I would say that forms a new shelf of price, and we could start pushing up from there to new all-time highs, right? But we got to form that new shelf first at about 12,000. That keeps the miners happy. That keeps investors happy. That keeps everybody happy. You're already starting to see more retail interest pick up. So it's an interesting area, right? Long term, everything's bullish. In the short term, it really depends on what unprofitable miners do in the short term, because eventually, they are going to, those with the smallest cash buffer, if price stays right where it is, are going to feel the pinch eventually, right? And they're going to have to start increasing sell side flow. So rally or correction. Let me know your guys' thoughts in the comment section down below. All right, with that being said, guys, it's about 1:14. Let's take a few minutes to answer some questions. I will bring the guys on as they are available. Let me see what's going on. Give me just a second here. All right, there we go. I got everything. I got everything pushed live. All right. Anyways, how you guys doing today?
Hey, all you cool cats and kittens. It's Jason here. I'm doing well. How are you?
I'm doing good, man. It's been an interesting day. You know, it's kind of a it's a
Interesting week, to be honest with you.
It's been an interesting week.
All of this it's definitely adding up to a precipice of something. It's just, this is what makes trading so hard, right? Is it up or down right now?
Is this thing on?
Is this thing on? What I like, you know,
I don't hear anyone else talking.
Here's what's interesting is
Hello?
Alex, you're embarrassing yourself.
Okay, well, that's great.
So go on with what's interesting.
It's only Tuesday, you know? It's only Tuesday in the market, right?
Mm-hmm.
Rally now or cry later?
Okay, I can hear everyone now. Thanks for your patience.
It's all right, man.
All right.
Welcome back.
Is this thing...
Tim Apple would like to order the whale secrets. Do we have a package we could send him if he can afford it?
Listen, the whale secrets is a special course that is only available from Arthur Hayes and HDR Global. You have to be an Aquarius. You have to be an Aquarius.
That's what I've heard.
Is Arthur Hayes an Aquarius? Are you an Aquarius? Who do you work for?
Absolutely.
I'm an Aquarius. Where do I sign up?
Aquarius, bud.
You can now buy Tezos from 10,000 convenience stores in France. News just in 16 minutes ago.
That is very convenient.
I would say, but here's the thing: like, that's not really news. It's not like, no offense, like it's not like 16 minutes ago, 10,000 convenience stores. Went from not accepting Tezos to accepting Tezos. Like, you know, more stores in France have been, you know, accepting Tezos, and that's just a headline that's like, hey, did you guys have any idea how many stores in France accept Tezos? Let's go see what the price is doing, though.
Yeah, that is obscure, but I mean, could be the source of something, you know.
Pump my bag, sell. What do I care? Okay, so overall, Tezos looks like Ethereum here, and looks like a lot of the altcoins. Price has been moving up in the altcoins relatively okay, which is kind of set up reversal trades for those looking at that. But Tezos, for me, needs to break 297 before I want to take another trade on it to the upside. Oh, it's still good. Hell yeah. All right, so here we go. Let's go back to the... I wanted to pull this up, right? I wanted to pull this up on the daily time frame of Bitcoin, right? Remember, guys?
You did say this is interesting. It's Tuesday, and then you didn't say anything. So.
Well, no, I meant it's only Tuesday, right? It's only Tuesday. It's very early in the week, and already we've got, you know, difficulty adjustment. We've got BitMex lawsuit. We've got BitMex going down. You know, we got Bitcoin consolidating around 9,000. You know, looking for a push up to 10K. It's like, man, what are we gonna see for this week?
Especially as someone who's a systems trader, like, and I don't usually ever look at the news at all, and like all of this stuff is just like, man, there's so much of it right now that it pushes you both ways. It's definitely an interesting time to be trading.
Link Marines, mount up.
I'm sure there's some Link boys out there.
All right. Let's look at some classic TA. We got the Bollinger Bands overall contracting just a little bit, but not too crazy. We are at the top of the Bollinger Band range, you know, so overall rejection from this area, sink back down to about 8,300. Makes sense if we do end up selling off here to the bottom of the range. RSI neutral, stochastic neutral. Money flow is positive, so overall these things are good. We kind of talked about these. I don't know why everything is like weird. Did I do log or I don't know why.
Nothing weird about log. I think log's far superior to linear, at least on larger time frames.
No, it's like these trend lines that I drew are off.
Mm.
It's almost like they're subjective.
It's it's almost like they don't even mean anything.
It's like they don't even fit right.
It's all right. We'll just let me just shimmy these things around a little bit, right?
Make them work for you after the fact.
Oh, because we were looking at the weekly. That's why. That's why they're off a little bit. Yeah, here we go. All right. We just switch time frames. They look better, right? No, so we talked about this, right? This kind of overall downwards broadening wedge pattern that Bitcoin is in. It does seem a lot of the fanfare was on breaking this diagonal trend line to the upside. Again, I would argue that a lot of fanfare would come in if we break this diagonal trend line to the downside. Again, that level is going to be right around 10,500 if it takes us 2 weeks to get there, right around 10,500. And then the next really bullish level is, again, 11.9 to 12.5. Getting above that level breaks above the horizontal resistance. And the horizontal resistance, I think, if we're looking at support and resistance, horizontal resistance is more relevant than diagonal resistance, right? I'm not even sure. Again, I've held that diagonal resistance not a super big thing, but again, people think that it is, and people will look at it, and we can see market reactions around these type of things. And again, broadening wedge patterns do typically tend to break to the opposite side. Descending broadening wedges tend to break up. Ascending broadening wedges tend to break down, right? This is from Bulkalski's Encyclopedia of Chart Patterns. Bollinger Band crossover with Keltner channels makes for a great squeeze indicator. Yeah, I mean, the kind of popular squeeze momentum indicator, Lazy Bear has a really good implementation on TradingView, is the Bollinger Bands going inside the Keltner channel. That's when squeeze is on, and when they expand outside of the Keltner channel, the squeeze is off. And that's the volatility trigger to trade in the direction of the squeeze momentum, the SMI's momentum oscillator, which is pretty much ADX. If you want the truth, it's just the directional movement indicator. But
It's like Wayne's World when it goes in the channel. It's squeeze off.
I should take $1,000 course on line plotting. Don Camden, I feel like this is about to be followed by Justin. I offer $1,000 course on line plotting.
And it's 100% accurate.
It's 100% accurate. 60% of the time.
It works every time.
So again, a lot of good things that could foment rejection right here from a classic TA perspective. But we also, again, as I said, got enough legs in us on the weekly to run up here to the $11,000 area. That's why I'm not I haven't thrown in the towel completely yet here, guys.
Yeah, I took a 4-hour long this morning at basically at the 12-hour close, so it was like 7 in the morning. Not exactly sure how I feel about it, but I am not smarter than my system, so hopefully she's reading the tea leaves better than I am.
So, looking on the daily, there just hasn't been much movement this week since we got to this area. It's just a lot of consolidation. I mean, on the lower time frames, yeah, it's been very volatile. If you're scalping, if you can manage to catch it and then not get like way stopped out right away, it's been volatile enough that there's been a lot of scalps in both directions. But yeah. I mean, mostly we've just been in like a $150 range for the last 2 or 3 days.
Yeah, and you can see from the volume profile session volume that, I mean, average trade volume, there's a lot of either distribution or reaccumulation occurring in the $9,800 to $9,500 range, right? What's below that has been bought up. What's above that has been sold off.
Yeah, as a matter of fact, we've been between those two order blocks. We've gone up into it, and then we dumped back down into the one below it, and then we popped up in the one below it, and then we dumped back down in the one below it. Yeah, it's just been
choppy, son.
Palooza.
What do you guys think about the difficulty adjustment that's going to be coming in later today?
I just kind of don't know enough about
I think that would be something for Jack to definitely weigh in on.
Yeah, to have an educated opinion. I mean, 5% difficulty adjustment. It'll alleviate some of the pressure on miners, but I mean, it's not it's not enough to really
It ain't quantitative.
make up
easy.
for half of their money disappearing, half of their income.
Yeah, I mean, I'm just relieved that it didn't completely, it's not a 15 or 20% adjustment to suggest that, it collapsed, right? The fact that we got here somewhat on schedule after 2 weeks is a good sign, right? So to the people who are crying doom that, nobody's going to stay aboard following the halving, clearly that was overblown. And, it's a good thing because, there is a risk that, if half the network logs off, you might not even make it to the halving block before a collapse occurs, right? That'd be the worst case scenario. So to see that, it's only a 5% adjustment, the halving event clearly came and went and everything's steady. So this is kind of the last hurrah. This basically, you're leaving the halving event in the rear view when you've made it successfully to the first difficulty adjustment, and future looks bright from here.
Yeah, I agree.
It had been, and the argument had been made that Bitcoin's halving was actually, news for Bitcoin. It's actually much bigger news for Bitcoin Cash and Bitcoin SV because, like, their hash rate tripled when Bitcoin had their halving, right?
I don't know.
I mean, I imagine it. Their hash rate collapsed immediately post halving, right? So
yeah, they had their halvings earlier.
Yeah,
That's right.
and then once Bitcoin goes through its halving, then the playing field gets leveled, and so I'm sure you'd see a lot of miners leaving Bitcoin. But there's also a game of difficulty adjustments, right? So it's like, especially with Bitcoin being on this slow difficulty adjustment cycle, so when Bitcoin suddenly looks unprofitable for them to mine, there's a huge vacuum usually to be filled in the other networks, right? So miners will find an opportunity when Bitcoin is at its most difficult. That it's a perfect opportunity usually to show up at the other networks and start mining really easily, and then these things kind of reach an equilibrium in time. But because of these halvings were kind of offset from each other by about a month, you saw huge exodus a month early from those networks, and then as soon as Bitcoin goes through its halving, those guys probably all flooded right back into BCH and BSV. So these things all kind of balance out in the end, but the fact that those chains didn't collapse, Bitcoin didn't collapse, the future does look bright.
And that was one of the things you were bringing up the other day, Justin, wasn't it? That you could apply quite a bit of game theory to this.
Yeah, I mean, my main contention is that I think the simplistic analysis is that okay, we have to look at what are the facts, and then what speculative kind of what speculative theories can we foment from that from those facts. The facts is that currently mining is on the average production cost per unit of Bitcoin is less than the cost for the block reward, right? Because 1 Bitcoin does not return the average production cost. Some miners might be more efficient than that. Some miners are going to be less efficient than that. We don't have the exact numbers on that. We know that currently, on average, it is estimated that mining Bitcoin right now is an unprofitable adventure. We don't know how well capitalized these mining farms are. We don't know how much of a cash buffer that they have, but we do know that we can see mining pools selling in excess a mile away. And we're seeing decreased sell side flow from mining pools right now, the lowest that we've seen for a while, and that's a pretty good sign. But I would argue that the game theory here is that miners know that all eyes are on them, and if they start, like they need the money, let's argue that they need the money. I would say that they probably don't need the money immediately, because if they don't have any cash buffer, very
good. They're probably not very good at what they're doing.
Probably not very good at what they're doing. But, I think that cash buffer can't last forever, and it's probably not massive, right? Maybe for the biggest mining farms, it's massive, but... So I think that miners know, though, that if they start selling quite a bit, or even increase their selling by a magnitude of 1, then I think that's going to... They think that that's going to cause a market panic. Again, I also think that they are bullish, and I think that they're speculating the price is going to go up, and that if they just hold out, they're going to be rewarded for holding this excess Bitcoin. Why sell right now at a loss just to bring in the cash that you need when you could wait, kind of grit your teeth through the dull times? And as somebody also pointed out, a lot of miners play the futures markets, right? So mining is certainly helping this right now. They're using the futures markets to hedge. They're using the futures markets to speculate. So, not all mining farms are run like Amazon, right? Like with the efficiency and iron grip of Jeff Bezos, right? There's a lot of game theoretics behind this. Now, referring to Bitcoin Cash's hash rate, on May 11th, Bitcoin Cash was putting in about 1.5 exahash. That has only risen. Let's get the timestamp on this, make sure this is right. Let me zoom this in a little bit more. There we go, yeah. So that is now at 2.8 exahash. So Bitcoin Cash hash rate has almost doubled over the past week. Not tripled, quadrupled. It hasn't yet doubled. But yeah, certainly it moved up, and we can see the exodus of hash rate, right? Post mining, right? So here's actually, sorry, let's find April 15th. You can see that hash rate was already going down, moving up into the halving event, and then boom. I mean, pretty big decline. Went from 3.5 exahash all the way down to 1.5 exahash, and it has not regained pre-halving levels. And I would argue that hash rate seems to be. We could draw a trend line on there, right?
I mean, it is a trend, literally. So I don't see why not. All it does is, I mean, it gives you the slope of a trend, right? That's how I often think about like trend lines. When I look at the break of a trend line, I think of like, okay, well, the rate of change in price has changed, and that often indicates a change in the trend. So that's why the break of a trend line means the trend is changing, literally.
Don Cannon says, formal education will make you a living. Cracking crypto will make you a fortune. Wait, what about Whale Secrets? Did he cover that? Yeah, man. The Whale Secrets is on sale just for you, Don. Discounted price of $800, but you have to act today.
And here is a sneak peek for you, my friend. Now just go find out what that means in whale.
The choppy trend is also good for grid trading bots. Yeah, it is. I take it you're using the 3 commas grid bot. Solar MKD. Go ahead, Jack.
Something else to consider about the mining industry. I mean, I read this recently, analysis of the industry, and they described how it's basically maturing and it's starting to look more like resource extraction industry. So they likened it to oil drilling or oil extraction operations, where some of these things cost millions, if hundreds of millions of dollars sometimes to set up and begin pumping the stuff out, and that their profitability forecast might extend decades into the future, right? And so some of the analysis was suggesting that Bitcoin mining is approaching something similar, where these operations are getting more sophisticated and they have a greater capital to work with, and that that miners are looking ahead at the long game, and they're willing to eat, maybe weeks, months, if not years of no profitability, low profitability, because for them it really is the end game. It's about putting the infrastructure in place now in order to see through a profitable next few decades. And like I mentioned the other day at the other stream, the hardware itself is starting to plateau, right? So we are hitting a point now where silicon-based ASIC chips, they're plateauing in their power, and there'll come a point soon, if we don't have a computing revolution, what hardware you're going to have now or the next few years may very well last you quite a few years going forward. So I think that what we're seeing now is the miners kind of like spreading their roots, and they're preparing for the long haul. They know if they build the ship right now, it's going to carry them years going forward. So we got to understand that, like, as the industry's matured, we've really come to a point where they're going to be able to weather the short-term turbulence.
Rising tide lifts all ships.
Yeah, you make a great point. It's not as if a lot of the big mining farms are companies, right? Like, oh, I mentioned this at the beginning of the show. So I bought some, normally I only buy stuff on Money Monday, but I bought some stock of Canon Creative this morning, right? That is a Chinese mining giant. They produce the Avalon and other industries as well, and they have investments in Bitcoin mining. You're saying that a company that's listed on the NASDAQ can't go get a loan? You know what I'm saying? Like, some of these mining farms are, it's not like they're just dudes. Like the big mining farms are just dudes. Like, the biggest mining farms are, in LLCs or corporations established in different areas. They're international organizations, and they have access to credit. They have access to credit lines. They can get a loan. They can weather the storm. Heck, some might have even gone and gotten the EIDL and Paycheck Protection Program grants. Who knows, right? So it's not as if like it's just their only income could ever possibly come from Bitcoin mining. And if Bitcoin is not profitable, they must sell immediately. They might have other investments. They might do some consulting. They might trade. There's all possible revenue streams that these companies can have that influences, well, are they going to dump their excess Bitcoin? And I think the big question is, who wants to sell Bitcoin at this price when we could wait and sell it at 50,000?
There's another thing to consider here, and there might be a bit of a game theory or a bit of a competitive practice that they might be engaging in now. Like maybe they realize that, again, anybody who folds now may be permanently out of the game, whereas the miners who, dig in, they might reap the rewards deeper into the future. So maybe right now what we might see is a bit of a competition between the miners. Maybe the big miners realize that maybe what we have to do, we have to drive the price down in order to eliminate the competition, because they know once they can maybe push all the smaller guys out, the next 10 years might be pure profitability, coast is clear, they're all going to be raking in the dough. So there might be like a bit of an incentive in order to shake the weaker miners out, in order to kind of maybe use the term monopolize, but they're going to want to eat up a bit of the market share of the mining capacity, right? So in order to do that, you might have to, I don't know, maybe find a way to dip the market and push those guys out. And it's not until the coast is clear and you've bidden off your portion of the market share, are they going to want to see the price rise? So I think there might still be an incentive, as counterintuitive as it might seem, there might actually still be an incentive among the big miners to kind of drag this out, and even
the small ones.
Yeah, even drag the price down and suffer through some unprofitability, because they figure they'll make it back up in the end,
right?
If they can take more of the market share to themselves in the future.
Yeah, they can afford it. Get all the other people out and then recover, and then they'll recoup.
It might be it might just be seen as a cost to corner more of the mining space in the short term, right? Push out the competitors, and give them more of the playing field going forward, right? And so it might be a matter of like who can hang on the longest, right? Who can suffer the longest and come out the other end, right? So
I saw an article the other day that I think it was Riot.
Riot blockchain.
Yeah, Riot. That they have a goal to have 25% of Bitcoin hash rate by, I think it was either by the end of 2021 or 2022.
Yeah, they just bought what? Is it 1,000? I think it was 1,000. We just covered this. 1,000 new S19s.
Yeah.
Yeah.
That was the story.
So yeah, I mean that's this is, if you look at what the institutions are doing, I mean just that snippet there alone, Riot blockchain, publicly traded company, very well capitalized, and they have that aggressive of an agenda. They want 25% of the mining share. Come on, man. You still got people. You still got people talking about Bitcoin's gonna fail and XRP to the moon. Come on, guys.
Someone's been playing too much.
People are dumping so much money into it. It seems. I mean, it's certainly, if it failed, it would not fail all at once. It would take a long, long time. There's a lot of people putting money into it, investing in it. I think
overall, like the macro fundamentals for Bitcoin are starting to look so bullish that certain individuals are salty that they're going to get left behind, and they just want to come out with the FUD and the bad stuff. You see this all the time in market cycles, though, right? All right, I wanted to answer some of these questions that I should have answered earlier. But agency wanted us to take a look at KNCUSD.
Got you, boy.
All right, KNCUSD on the daily time frame is looking relatively neutral to me. We've really got some work to do for us to get back into a bullish trend on KNCUSD. I mean, we need to move up like 12% to get back into bullish trending territory. But if we can close the daily above 72 cents, then I would be pretty bullish. That would be breaking above previous resistance as well. Also, we can see that would be breaking back into the previous distribution level of Kyber Network's high. Let's actually get some more data. Let's actually get more data on KNC. Let's just look at the... Yeah. So that's better, right? That's better. All right, so that's getting us back up, as I said. Same with the Coinbase chart, getting us back into that previous distribution level. Here on the calculated by trading view chart, it's about 75 cents, but 74.75 is fine. Let's get back to that.
Terrible.
Let's just keep it here. Now there is a trade setup that I wouldn't take, but that is a potential, and that is using the continuation filter as kind of reversal trade to the baseline. That would be a trade from 66.5 cents to roughly about 74 cents, right? So if we get a daily close above 66.5 cents, we could potentially take that. Let's take a look and see what our traditional stuff do. Bollinger Bands are getting really, really tight, moving for a breakout. It wants that breakout to be above 70 cents as well. RSI neutral, money flow is bullish. So yeah, I mean, I think we just need to see some patience. We can see the last big contraction on the Bollinger Bands right here, and then we broke to the upside and had a really nice run. I think we're likely to see that same thing. I don't see Kyber Network going anywhere right now. I think we've got some time before we see another breakout. Let this either reaccumulate or just do what it's going to do for a while and watch those levels for breakout again. Those levels for me being about 75 cents, or maybe if you want to be really aggressive, 66 cents. But
I like that question, Solar, so I'm going to make sure it's added in.
Bottom feeder is calling for a signal as of yesterday too, pushing up to about 72 cents with a stop loss at 50 cents. So there is that. And bottom feeder seems to have done really well in the last few trades. So yeah. Boris Bitcoin asked, what were my thoughts on the Aussie dollar? I think we already looked at this, but let's take another look. Somebody could block Kelly Watson from our chat forever, please.
Man, that's not even good shilling. Gee, got me a lot of BTC right now.
Yep.
Oh, you get it, Kelly.
I don't understand, like, why is that so popular? Like, hey man, like this hacker hacked me a whole bunch of BTC. Like, why would anybody, if somebody could successfully, because I'm sure they can, but if somebody can successfully hack somebody else's Bitcoin, why would they then create a business model where they sell that free money that they could sell on any kind of like, shady crypto exchange for something and then move it, launder it around and get Tether and into USD eventually? Why would they sell it to you for, the cheaper price, right? Hey, man, give me $450 and I'll hack a Bitcoin for you. Why wouldn't they just sell that one Bitcoin? It doesn't make any sense. It's a model that doesn't make any sense. No.
Because, Justin, they got locked out of their account and they need to transfer it. Like a Nigerian prince.
And you guys keep laughing, dude, but one day that Nigerian prince is going to come true.
Yeah, that's probably true. He's out there right now, just like,
Imagine if you were a Nigerian prince and no one would help you transfer your money out of the country.
God.
Yeah, he's like, yeah, this long time scam is screwing me. No, I swear to God, I really am.
I'm super legit, man. I know you're not going to believe me. Oh no, another one.
I just got a lot of BTC from him. That's funny.
All right. The Aussie dollar is looking good. I like this. This is the one that this is one of the ones that I put on my watch list to review at daily close, Boris. Solar MKD asks, how can I have focus with so many trades on? I only trade BTC and sometimes I lose focus. Core principles, man. Core principles. Verified strategy. Every single trade setup has a rule. I mean, I can put the rules that I need to take a trade on a piece of paper, and all those rules need to be true. And after you just do that for so long, it becomes a rote, it becomes muscle memory, and it takes you 5 seconds to look at the chart and see if there's a trade there or not. And then the way that I trade is I don't check it for another 24 hours, and I just let the trade play out. So patience, sitting on my hands, having the data, back testing and forward testing and live trading of knowing my system works. And it just comes with time. And then, just overall life optimization, right? I can only speak for myself, but like I wake up early, I eat a healthy breakfast, I get my workout in, I don't play around on my phone a whole lot. I try to optimize things in my life, right? I don't waste my time. I don't hang out with people that drag my intelligence down. I surround myself with people that challenge me. I take on interesting projects. I read a lot. I don't watch TV. I just continually try to push and improve myself, right? And the problem with Bitcoin trading, it's not a problem, but one unfortunate trend that I see is you got a lot of degen young millennial guys and gals that don't really have a lot of experience with investing or trading, and so they come into Bitcoin and this isn't you, I'm not saying this is you, but they are in their own personal life undisciplined, unfocused, not goal oriented, not self-motivated, don't have a strong work ethic, and really haven't done a whole lot with their lives. And that's okay. That's why I'm here, because there is an opportunity for those people. They weren't born that way. They're not stuck that way. You can put the personal work in to improve your life, right? I did. Everybody on my team has. I've seen them go through that process. And
why are you personally attacking me?
Why are you personally attacking me?
If you can focus on building a profitable strategy in Bitcoin, that's something that you can hold on to and can help give you a reason to improve yourself. Like if you can see some initial success, that gives you the incentive to want more success. And when finally somebody like me comes along and tells you, hey man, guess what? The way to get that success is to get up at 6 a.m. every morning, to do some squats before 7 a.m., to be in the shower by 7:30 so you can eat breakfast at 8 and be to work by 8:30 and stay at work until 5 p.m. And then after work, go play basketball or something and have some fun, and then come back in and learn to code for 2 hours. You got to grind, man. You got to take advantage of all that life has to offer. Vitam Impandero Vero, good to see you back, man. I saw your comment earlier. Jacquis Dreyer says, I can only trade if I use Coinbase. Is it good? Best possible exchange you could use out there for security. Maybe, Coinbase Pro is really good. You can trade on there. Certainly that's fine. Fees aren't amazing, but, it just depends on what your strategy or style of trading is. You don't have a lot of options, but it's a good place to start if you're just relatively new to the markets. Yes. What do I think of UGAZ?
What's that?
Yeah,
Gesundheit.
I don't know. Yeah, let me Google it.
Got to be some kind of ETF or something.
Let me Google it. Oh. Up gasoline. Okay, the ETF. Sorry.
Yeah. That makes sense.
So I talked about this yesterday. Let's go look at my ETF watch list for commodities. I thought it was UGAZ that I wanted to take. It was DGAZ. DGAZ, I should have taken the long here to take advantage of this movement right here. UpGaz is about to complete a bottom feeder trade, which is, pretty much darn near successful. Take profit will be at 2029 and that trade will be over. But for a trending long, we need to be above 26.39. So I'm long on USO. You can kind of correlate that to what you want. USO performing quite well. As far as UGAZ, particularly with the fact that it's you get X'd up, I would wait for the strong trending signal, right? Especially, I mean, the other only trade setup would be this bottom feeder trade, and it's about to complete.
Man, look at that one really off bottom signal up there.
That's terrible, isn't it? I can't just.
Wow.
Hey, it's
Hey,
funny.
how did that even happen?
No one bats 1,000.
Well, but even for that, the structure of that should be overbought within Minx or oversold within Minx, shouldn't it?
So, Alex can comment on this. Like, there are, without getting into too much detail, there is one special type of bottom there. So bottom feeder is like 9 signals rolled into one. And one of those indicators, so the majority, almost all of them require oversold conditions as one of the parameters on top of other things. But one of them is a trump card in the fact that it certainly is oversold, but in wildly different market conditions than would normally be oversold. But it's highly accurate, right? It's like that. It seems to get oversold when the market's like has moved up a little bit and then pulls back just a little baby bit and then pops off. Like, it catches those, but sometimes
Not on this day.
it's not that day, right?
They can't all be winners.
No, they cannot. And that's something important that everyone out there who's listening needs to know is you will not have a good trade every single time. It's part of trading. What makes a good trader is the people that can build it into their strategy and know it. Because
That's why you don't bet the farm on every trade too.
What's that?
That's why you don't bet the farm on every trade too.
Yeah, that's how you lose the farm.
Just the barn.
We have a question over on Twitch. What's your view on Litecoin USD?
Let's see here. I don't have a strong view right now. I like Litecoin. Litecoin's my love. But Litecoin looking very much like Ethereum. We need to see Litecoin above 47.29. Litecoin just completed a successful bottom feeder signal. You see the bottom feeder indicator called this bottom. That trade is now complete. It's now in what I like to consider a no trade zone. If Litecoin closes a daily candle above $47.29, we could be looking for potential trending long trades to the upside, potentially targeting 55, probably 52, be an initial take profit. But right now, I don't see anything for Litecoin on the table. If Litecoin starts to sell off here a little bit and closes below $43.30, I would actually consider shorting Litecoin USD. It is over 9,000. Thank you so much for the follow on Twitch, Maverick and Lars Larson. Thank you so much for the YouTube sub, my friend. Don Cannon asks, can you look at Bitcoin? I don't know what that is, man. Let me get Jamie, pull Bitcoin up, man.
What's Bitcoin?
Larry Z says, is Coinbase the best, safest on-off ramp for fiat? Yeah. Pretty much, yes. If you're in the United States, certainly. It's just super convenient, man. Coinbase Pro is, if you just want the easiest, most secure way to go, Coinbase Pro, deposit funds into Coinbase Pro directly from your bank account and then buy for a very low fee. If you use Coinbase, it's expensive. Like, for example, I went to buy $100 worth of Ethereum this morning just because, and on Coinbase, and they wanted to charge me $3.96. But if I deposit that $100 into Coinbase Pro, then I just pay probably like a 30-cent market taker fee. All right, guys. It's about time to go, guys. It's about 2:00. All right, so we covered a whole lot, guys. If you are just tuning in, I'm sorry. Make sure to tune in and catch us next time. I'll do the whole outro here in just a little bit. Do you guys got any closing thoughts before we kick off here?
I have no thoughts.
Stack your sats, boys.
Stack your sats. There we go.
Yeah, to listen to doors.
I would say position side accordingly. This is the type of market that really chops people up because it goes back to something that Solar said there. It's like, how do you
not get stressed out and lose track of all your trades. That usually means that you are not organizing yourself in a manner, and usually means that you're not risk managing very well, because the stress is what's keeping you in and out of trades because you're not sure if you're right or not. That's a big problem. So learning how to position size correctly, building yourself a system, stuff like that, that's all keys to getting the stress out of trading. And
Care much less about a
opinion,
trade.
I would have burned out if I would not have learned proper risk management and profit taking.
Yeah. You care much less about a trade if it's like worth 1% of your account. You're like, okay, well, it didn't work out. Move on.
Yeah, fully agree, guys.
And the funny thing is, once you start doing this correctly, the ones that don't work out, you almost laugh at them because you're like, in the past that would have destroyed me, but then you're like, oh, who cares, man? Move on to the next one.
Yeah.
Everyone wants to know what Justin's secret is when he's like, well, you're always so calm and no matter what the market's doing. It's because it doesn't matter what the market's doing. We're comfortable in our positions because we've tested them. Not always going to work out right, but that's why we position size.
That's exactly right, my friend. Well, thank you guys, Jack, Alex, Jason, for coming on the show. I'll see you guys tomorrow.
Peace.
Cheers, boys.
All right, with that being said, guys, let's roll the cue. Roll the tape. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. Just had the team on. My name is Justin Wise, lead analyst and senior mentor at CrackingCrypotcurrency.com. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, make sure to leave them in the comment section down below. We'll do our absolute best to respond to you as quickly as possible. Of course, if you're new to the channel, make sure to subscribe and hit the bell icon. There is, pretty rampant shadow banning going on. Google is cracking down on crypto, so it's the only way to get the information out there and be notified when we go live, which is every day at 12 p.m. Central Standard Time. Mark your calendars. And we highly appreciate the support. Make sure to smash the like button or give us a follow or subscription if you're watching on Twitch or D Live. If you're on Facebook Live, hop on over in the Discord. So we covered a whole lot today. Obviously, we talked a lot about the hash rate. That'll most likely be coming out later today as a Breaking Bitcoin bit, so you get a notification if you're subscribed. And we talked a lot about price action. We talked about miners and all eyes being on the miners. We talked about kind of the pros and cons of that argument. We also talked about the BitMex status update. BitMex, of course, going down. We talked about Harmony 1 launching sharding and staking, the only proof of stake blockchain that has sharding enabled on it, and that they're going to be offering staking returns with Binance Will Be. So make sure to go check that out if you guys are interested. If you guys want to trade along with us and get access to all that our community has to offer, make sure to click the link in the description or navigate over to premium.crackingcryptocurrency.com. Whatever you do, make sure to hop in the Discord. Links are all in the description down below to anything you could possibly want. I just had this joke in my mind, today's wardrobe and watch were provided by myself because I pay my own bills. Anyways, you guys have a fantastic day. Listen, it is only Tuesday. We're looking for a big movement today. We're looking for a big movement in Bitcoin's price this week. We talked about this for a while, but just be careful. Currently, I talked about how I'm just trading the range right now, and we're waiting for the confirming signs for a large breakout or breakdown. We talked about the price levels. We talked about the different charts to be watching. We talked about the different metrics to be watching. You guys can rewind if you want to catch all that. But overall, position size wisely and stick to your strategy because it will tell you when the right time to act is, better than crypto Twitter will. All right. With that being said, guys, make sure to do something awesome today. Give yourself a big high five and trade safely. I will see you guys all tomorrow. Have a great day.